I got asked the question of how would I invest $1,000 as a brand new investor who's never invested before? Now, that's not life-changing money. However, that could be the catalyst that starts you down the path to financial success. Now, the very first thing that I would be thinking about if I had $1,000 to invest is I would be thinking about how can I build wealth over a longer period of time. So I'm not going to be thinking about how can I quickly turn this $1,000 into $2,000. Why? Because a lot of times when we go after that fast money, most of the time it doesn't end the way that we think that it's going to. So if you've ever heard the phrase that it's too good to be true, there's a reason that that's a phrase. Because most of the time when we're going after things for short-term gratification, it ultimately ends up going the opposite way of what we thought it would do. The very first place that I would be looking to invest would be into the S&P 500. I'm a fan of the S&P 500. I have a big portion of all of my personal investments invested in the S&P 500, and I would continue to do that if I had to start over with just $1,000. And I would allocate 40% or $400 of that $1,000 into an S&P index fund. Now, the fund that I like investing in Vanguard's VOO. But SPY is also a good option in this space as well. When investing in the S&P 500, you have wide exposure across the top 500 companies within the US. Selecting index funds like SPY and VOO will not only give you that exposure to the 500 largest companies, but the fees associated with each fund are extremely low. And they both have a long track record of continued growth year over year. So that's where I would invest 40% of that $1,000. After investing 40% of our $1,000 into the S&P 500, the next place that I would be looking would be at an aggressive growth index fund. Now, the ones that come to the top of my mind right now are QQQ, SPY, and VGT. Now, personally for me, I like Vanguard's VGT because it is an aggressive growth technology-based index fund, and it focuses heavily on companies like Microsoft, Apple, Nvidia, Tesla, and Palantir. And the amount that I would allocate to an aggressive growth index fund would be 20% of my $1,000. So we've got 40% in the S&P 500, and now we have 20% in an aggressive growth index fund like Vanguard's VGT. So that would be 60% of our $1,000 or $600 would be allocated between these two funds. The next place that I would be looking to invest would be in a dividend-based index fund. And the fund that I really like right now is Charles Schwab's SCHD. Now, I also invest in SCHD in my personal accounts, and I would absolutely pick that as a fund that I wanted to start my new portfolio with. And I would be looking to invest $200 or 20% of my total $1,000 into this fund. I really like this fund because within SCHD, it includes some of the top companies in the United States that have a long history of paying out a solid dividend. So we're investing in the S&P 500. We also have an aggressive growth index fund that we're investing in, and we also have a dividend paying index fund that we're investing in. So the next thing that I would be looking to invest in would be in individual stocks. Now, this is an area where if you're new to investing, you want to be careful on what you're investing in. I don't invest in penny stocks or junk companies that I'm hoping that will be kind of like a lottery ticket. That's not the way that I like to invest. I like to invest in either blue chip companies or newer startup companies that have an extremely strong balance sheet and show that they have a technology or a service or a product that could be a major disruptor in the space. So those are kind of my criteria when I'm looking at individual stocks. For the most part, if I'm sticking with blue chip companies, I'm going to go with a company like Facebook, Apple, Tesla, Nvidia, Microsoft, Google, one of the big boys that have been around for a while and show extremely healthy balance sheets and cash flow. If I'm looking at a smaller company that has had some success over the past year or two, then I'd be looking at a company like Him and Hers Healthcare. And I would only be looking to put about 5% of my $1,000 in individual stocks. I like individual stocks, but when we're just getting started out, I want to make sure that I'm putting my money in places that have the least amount of volatility And when you're investing in index funds, they are less volatile than individual stocks. So you're not going to see much movement to the downside in these index funds, but you also won't see as much movement to the upside. So now we've got individual stocks covered. The next place that I would be looking to make an investment would be in the cryptocurrency space. Now, I'm not a big crypto guy, and I admittedly don't do a lot of research and digging in the crypto space. But one thing that I do like is I do like Bitcoin and Ethereum. So those would be the two places that I would be putting my money. I don't need to be the expert in the crypto space. It's not a space that I want to heavily get involved in. I just want to focus on the top dogs in that space. And right now, that's Bitcoin and Ethereum. So I'm going to take 5% of my $1,000 and I'm going to invest it in either Bitcoin or Ethereum, or split it up and invest it into both. Now, some people may be a little bit more bullish on cryptocurrency, and that's completely fine. I prefer investing in index funds and stocks over investing in crypto. So everyone has their own preference on how they'd like to invest. But if I am going to invest in the crypto space, it's going to be a smaller percentage of my portfolio, and that would be 5% of my $1,000. With the remaining 10% or $100 of our initial $1,000, I would be looking to invest that in myself. And that could be done by investing in online courses. Maybe it's buying books. Maybe it's attending seminars or getting one-on-one customized coaching in order to continue to improve myself. Anything that you do to invest in yourself is going to have an extremely high ROI, because then you can then take those skills to continue to improve at other facets of your life. That's how I would invest $1,000 if I had to start from scratch all over again. And one of the things that you'll notice is the bulk of the money that I would be investing would be in more stabilized investments that don't have a lot of volatility. And as I continue to go down and allocate that money, things may get a little bit more riskier, such as Bitcoin or Ethereum, or investing in individual stocks. So what do you guys think? What do you think about the way that I allocated this $1,000? Do you agree? Do you disagree? How would you allocate it and why? Let me know down in the comments. As always, thanks for watching, and I'll catch you on the next video.